If instant payments were optional, we wouldn't already be seeing trillions of dollars move across them. Markets don't adopt infrastructure at scale by accident. They do it because it solves real problems faster than the alternatives. Hello, everyone, and welcome to Icebreakers in FinTech, the podcast where we thaw out the cold, confusing world of financial technology. I'm Payments Elsa, and each episode, we're breaking the ice on the trends shaping how money actually moves. Payments, rails, artificial intelligence, banking infrastructure, and the innovations everyone's talking about, but not always explaining very well. If fintech ever made you feel like you needed a decoder ring, you're in the right place. We're here for the real conversations, clear explanations, and insights you can actually use. So get comfortable and let's break the ice on the future of finance. Let's reset the conversation around instant payments. Because for a long time, this was framed as innovation, a pilot, something to explore eventually. That framing simply no longer holds. Instant payments are now foundational infrastructure, and the proof is in the transaction volume, not just the marketing decks. So, what is the data actually telling us? In 2025 alone, almost $2 trillion flowed through instant payment systems in the United States specifically. And we've seen that adoption has accelerated greatly across two distinct networks. According to public information from the Federal Reserve and the Clearinghouse, Fed now surpassed 1,500 participating institutions in 2025, and the Clearinghouse surpassed 1,100 on the RTP network. Hundreds of billions of dollars in value moved across instant payments rails in a single quarter. And the average payment value shows that this is a real economic opportunity. That matters because markets don't move that kind of money unless the use case is real. What's interesting about the US is not that we have two instant payments networks. It's that while they're at different stages of maturity, they're both seeing meaningful adoption. That tells us something important. This isn't a technology experiment anymore. It's a behavioral shift. And behavior is much harder to reverse than policy. Now, here is where I want to slow down a little bit because a large percentage of institutions that are connected to the instant payments rails today, whether that be RTP or FedNow, are still receive only, or as I like to call it, receive first. That's an understandable first step. But it's not a payment strategy because the economic upside of instant payments sits primarily on the send side. Sending enables business payments, payroll, supplier payments, request for payment flows, and treasury optimization. Receive only will keep you compliant, but send capabilities are what's going to keep you competitive. But this is really a revenue conversation. There's an uncomfortable truth in banking. Instant payments are often discussed as a cost center, not an opportunity. But faster money movement, that enables premium services for businesses. It allows time-sensitive payments that customers will pay for. It reduces operational friction. And it provides an avenue for stronger customer retention. Once account holders experience immediacy, waiting becomes a major problem. And when waiting becomes a problem, your account holders will look elsewhere. Think about instant payments as infrastructure that reshapes expectations, not just transactions. But infrastructure determines what's possible, what's expected, and what feels outdated. Institutions that treat instant payments as optional are not standing still. They're falling behind institutions that are already building around them. Instant payments aren't coming. They're already here, and the money is already moving. The only remaining question is whether your institution will lead with intention or end up having to catch up under pressure. That wraps up this episode of Icebreakers in FinTech. If this conversation helped melt away some confusion around FinTech, payments, or how money is evolving, be sure to follow, subscribe, and share the show with a friend or a colleague who's still asking the question, wait, how does this actually work? New episodes drop with fresh perspectives, practical takeaways, and just enough spice to keep FinTech interesting. You can find more clips and conversations across all of my channels at Payments Elsa. Keep asking smart questions and don't let the buzzwords freeze you out. This is Icebreakers in FinTech, and I'm Payments Elsa. Stay curious.